In a world where inflation eats into your savings, market volatility triggers panic, and social media influences your money moves, how do you build real wealth in this situation? In this video, we are going to break down 7 proven investment strategies backed by real examples, data, and practical steps. Now, if you want to build a solid financial foundation, then watch till the end. Strategy number 1, that's goal-based investing. If you don't know what you're investing for, no return will ever be enough. Most people invest based on age, trends, or tips. But real investors start with a goal in their mind. Now, why this matters? According to 2023 DSP Mutual Fund report, 78% of Indian investors don't have a clear investment goal. And therefore, most of them struggle to stay invested during market downturns. So it's very important to set a financial goal. So now categorize your goal into short-term goals. These are goals to be achieved in a time period of say 1 to 3 years, which includes your traveling abroad, your electronic gadgets, the iPhone, the iPads, and etc., and the car that you want to drive. Then the second category is your medium-term goals, which are to be achieved in a time span of say 3 to 7 years, which may include your marriage, your new home down payment, etc. And finally comes the long-term goals, which are to be achieved in a time period of more than 7 years. Say your retirement, your children's education, etc. Now, once you decide your goal, the next step is use the goal calculators or the SIP planners to determine how much of money you need to invest per month, and then accordingly you decide the instrument that can help you achieve your goal. Strategy number 2 is real estate versus equity. See, remember, brick by brick may build a house, but compounding builds an empire. Property appreciation is real, but is it enough? So let's compare it with real data. Mannat, bought by Shah Rukh Khan for 13 crore rupees in early 2000s. Its current value is around 200 crores. Nifty 50 over the same 20 years has grown at an average CAGR of around say 12.5%. This means if 13 crore rupees was invested in Nifty 50, it would be worth over 400 crores today. So let's take another case. Investor Rakesh Jhunjhunwala sold his Crystal shares for 40 crore rupees to buy a home. That house today is worth 100 crore, but those shares, had he held them today, would have been worth more than 300 crores. So the point is, equity compounds and compounds faster than real estate over a long term with better liquidity and lower holding cost. Strategy number 3 is gold. The crisis asset you should never ignore. Remember, when everything falls, gold doesn't shine, it stands tall. Now, gold continues to prove its strength in uncertain times. From Jan 2025 to April 2025, gold prices have rose by 23%. Since 2016, gold has almost tripled from 30,000 rupees to 90,000 rupees per 10 grams. Now, gold acts as a solid hedge against inflation, currency devaluation, and most importantly, the market crashes. Financial advisors generally recommend 5 to 10% of your portfolio in gold through instruments like the gold ETFs, the sovereign gold bonds, gold mutual funds, or digital gold. But avoid jewelry unless it's for personal use, because it includes making charges and doesn't earn return. Strategy number 4 is your crypto. Remember, speculation builds excitement, but discipline builds wealth. Cryptocurrency adoption in India is rising. So is its volatility. Same goes with the futures and options. They are volatile, highly volatile, as good as crypto. According to a study conducted by SEBI in 2024, 93% of the retail traders in derivative trading, option trading, future trading have lost their money. Only 1.2% of the traders have made money, and that too around 1 lakh rupees per year, which is hardly 10,000 rupees per month, or maybe even less than that. Cryptos and FNOs are the most volatile instrument. Say for example, Bitcoin dropped from $73,000 to $57,000 between March 2025 to April 2025, which means a drop of over 20% in just 3 weeks. Still, if you want that exposure, cap it. Maximum 5% of your overall portfolio should be invested in cryptos. Treat it as an experimental asset class and not a wealth creator. Strategy number 5, emergency fund and insurance. It's your financial protection layer. Before you grow your wealth, make sure you can protect it. Before you invest, protect your capital. Keep at least 6 months of your expenses in either liquid fund or a fixed deposit or a sweep-in account. This is ideal for uncertain situations, unexpected situations like medical emergencies, a job loss, or a family support. Also very important is to buy a health insurance, because a single hospitalization in today's world can cost you around 5 to 10 lakh rupees in a private hospital. So don't rely solely on a health insurance provided by your employer. Get an individual or a family floater policy to protect yourself from such unforeseen expenditures. Also, buy a term insurance. If you have dependents, term insurance is a must. A term insurance worth 1 crore, you can buy it just by paying 800 to 1200 rupees per month, which is, I think, affordable. Also, a common myth is that your provident fund is equal to your emergency fund, but the reality is that your provident fund is not your emergency fund. It's your retirement safety net. So don't break it early. Strategy number 6, shop or home. Which to buy first? Now always remember, assets that pay you are assets. Everything else is a liability in disguise. Should your first big investment be a home or a commercial shop? Let's compare. Rupees 20 lakh shop in a metro area yields around 12,000 rupees of rent per month, which is equal to 7.2% of annual rental yield. On the other hand, a 1 crore home which has an EMI of 60,000, maintenance of 7,000 and zero income. So commercial assets are real assets that will give money in your pocket. Commercial assets can be retail shops, small warehouses, co-working office spaces. See, if you're a business-minded person, start with income-generating assets. Emotional purchases like home can wait. Strategy number 7, and this is my favorite. Invest in yourself. You are the highest ROI investments. See, markets can crash, houses can depreciate, but your skills can only appreciate. A data shows that improving your skills and education can double your income in say 1 or 2 years. One of my student who is a working professional in the city of Bangalore invested rupees 60,000 in a data science course in 2023. By mid-2024, his salary jumped from 80,000 rupees a month to 1.5 lakh rupees a month, which is an 87% increase in his income. No instrument can give you such a high return. So remember Warren Buffett's advice. The best investment you can make is in yourself. Anything that improves your talent, nobody can tax it or nobody can take it away from you. So therefore, upskill yourself regularly. Whether it's coding, design, AI, finance, or sales, your human capital will always outperform the market in the short run as well as in long run. So start small, stay consistent, and always invest with a purpose. So if this video has helped you, share it with someone who is just starting their financial journey. And don't forget to comment your biggest financial question. We might cover it in our next video. Thanks for watching the video. So do like, share and subscribe to the channel and never miss such simple videos on finance. Bye-bye. Take care. Jai Hind.